Well, the Reserve Bank's Monetary Policy Committee meets this week to discuss what could be the country's final rate hike decision for this year. The announcement is expected on Thursday, the 24th of November, and some economists predict a raise by 100 basis points. Well, the hiking cycle started with a 25 basis points hike a year ago, taking the repo rate to 4.75%. But by September 2022, this had been hiked to 6.25%. So let's speak now to Economist Kevin Lings, Chief Economist at Stanlib, about this. Kevin, thank you for your time. Good morning.
No, good morning. Thanks.
And that's the question. I mean, will interest rates actually hike this coming Thursday? What's your prediction?
Certainly, I think they're going up further. I'm not sure about 100 basis points. I think the debate will be more actually 75 basis points or even 50 basis points. We have seen some slowdown in the pace of increase in international interest rates. That helps a bit. Obviously, the currency is a little bit stronger. So there are one or two factors that might help the Reserve Bank, but I guess you would go with a sort of safe bet, 75 basis points on Thursday.
Yeah, that's where we were looking at. But also, how will that then still impact the consumer and their pockets?
Very badly.
Yeah.
So the consumer, I was looking at retail sales that came out, and we've got the third quarter retail sales data was negative in the third quarter, second quarter was negative. Effectively, shopping is in recession, and that shouldn't be a surprise because ultimately most people's wages are not keeping pace with inflation. Now, clearly there is some wage pressure in the economy, right? So we can see unions arguing for a higher wage. But if you look at the average in the country, most people are getting around about 4.5% as an annual increase, and clearly inflation well above that. So your income's going backwards,
right.
And it's going backwards in key areas, right? You're spending much more on fuel, you're spending much more on food, areas you can't avoid. So that means you're under significant pressure for all of your other consumer items. Now you add further interest rate hikes, it's going to hurt.
Yeah, and also speaking of that, debts, again, I mean, one of our viewers, I think I remember when we had this conversation with Gareth, mentioned that when they qualified for their bond then, it was okay, but now they're not sure if actually they afford that price anymore. So even with debts, seemingly we will see consumers still reeling from this.
So we can see that already in the debt numbers. We can see distressed borrowing starting to come in. We can see more evidence of households coming under pressure, bank credit coming under pressure, right. Store credit. Now you add another 75 basis points, that's definitely going to hurt. And so the cumulative effect is what we've got to look at. So far, I think we've put up rates 275 basis points or 2.75%. You add on another 3/4 of an increase in interest rates, that's a significant hike. And so people's ability to afford their debt, afford their house, afford their car comes under pressure. And what consumers tend to do is then they go into more debt in order to maintain a lifestyle.
Right.
Because your income's under pressure. It's a terrible thing to do because obviously you just dig in a bigger and bigger hole and eventually it all just catches up with you. But from the Reserve Bank's point of view, they feel inflation is too high. It's over 7%. They've got to get it back to the target. They've got very little else they can do. They've got to send a message that they're not going to tolerate inflation above the target. So from their perspective, they're going to keep hiking rates until we get inflation clearly moving in the right direction.
Yeah, and Kevin, just speaking of that point you made there about digging a hole for ourselves, Black Friday mania, will we be digging further holes this coming Black Friday
weekend?
Weekend?
Unfortunately.
Oh my goodness.
So we can see what consumers, it's interesting, consumers are actually delaying purchases as you get, in fact, as early as August, September, October, we can see consumers holding back in anticipation of Black Friday. So Black Friday has become a massive event in South Africa. And obviously, if you then include actual Christmas and so on, that's really where we do the bulk of our shopping. Unfortunately, consumers get enticed by all of the advertising and probably spend more money than they ought to, probably are enticed by the deals that are out there, and so they end up potentially more in debt because a lot of that consumption goes on credit cards and the cost of that debt's going to go up. So I think it's something that we're going to struggle to avoid, but from a prudent point of view, you should be quite cautious in this phase because interest rates are still on the upward trend.
But consumers also convinced they are saving around this time. Is that the case really? Because you mentioned advertising, which sometimes gets the better of consumers. Are they really saving?
Look, I think it's one or two deals, yes, obviously. If you're in the market for a TV and the TV comes on a special, yes, obviously you are benefiting from that. The question is, are you enticed to make a purchase you would ordinarily never undertake, simply because you think this is a good deal, in which case clearly you're not saving, you're simply spending more money than you can really afford. And when we look at the deals, they're not as if they're across all categories. There are one or two categories that look attractive, and that's to entice you to spend additional funds, and that's exactly what the consumer does. And so it's become a massive spending spree, not just on the deals, but in general.
All right, we have to, of course, be cautious around this time. And thank you so much, Kevin, for coming through
Pleasure.
and speaking to me about this. Kevin Lings, Stanlib chief economist, talking to me today about, of course, his predictions on the interest rates, of course, going up this Thursday or going down in Black Friday mania, which we know all of us will be, of course, excited for Cyber Monday and Black Friday.